I welcome you once again to Executive Massacre Tutorial Center. Our center is located at Shoman Estate. Today we're going to have a discussions on management accounting. We have videos that we have posted on our YouTube and that of our social media channels on financial reporting. So we have a complete video on consolidation. So you can start watching that of our videos, and I can bet you that when you watch it, you're going to get everything right. So today I'm going to also start with that of management accounting. This one is our first section of management accounting section. So we're going to go through a lot of topics, but I will start maybe when it comes to the management accounting topics. We're going to deal with short-term decisions. We'll check on the performance evaluation. We will also check on the long-term decisions, and also there is let's say when it comes to the public sector budgeting or budgeting and budgetary control, we're also going to check on this aspect as well. So, but today we're going to deal with that of the short-term decisions, some of the short-term decisions. So, when it comes to the short-term decisions, so some of the short-term decisions, and under this as a topic under management accounting, we are going to go through a lot of topics. We have a lot of, let's say, subtopics under it. So we're going to go through relevance costing. We check on the make or buy decision. Maybe after as we are going along, going to also check on further processing. We check on throughput accounting and also limiting factor analysis. So we'll go through a lot. So by the time we finish with all the other subtopics under the short-term decision, you will be able to understand anything that you need to know under when it comes to the short-term decision. So that's why we're going to start today as our first part of the management accounting section. We're going to start with the short-term decision, and I will start with relevant costing. Relevant costing as our first topic under short-term decision. Relevant costing. So relevant costing is, let's say, the future cash flows that we are going to let's say going to incur based on the direct decisions that we are going to make, or based on decisions that we are going to make. So any additional cost, or any let's say any cash flow that we are going to let's get as a business because of our operations. So we have some examples of, let's say, some of the decisions that we can make. So you can make decisions on let's say when it comes to one time, let's say, decision that let's say a customer has, let's say, requested from us that, oh, we want you to do this one for us, we want you to do this one, let's say a request from a customer. All these things are some of the stuff that we're going to look at when it comes to the short term, the relevant costing. So I have some simplified notes here that I would just want you to get to know some of the things that you're supposed to know when it comes to relevant costing. So to start everything, you should know that relevant costs are the future cash flows arising as a result of the direct decisions that we are going to make. So if an organization make any decision, then the cash flow that will come out of it will be what that we are going to term as our relevant cost. So, but there are some of the examples when it comes to relevant costing. We have one-off project, or maybe a special order. It can be a request as well. So let's say when it comes to Executive Massacre Tutorial Center, if that you want to know our relevant cost that we have here, we need to consider some stuff, because let's say we have in our board, we have chairs, we have laptops and other stuff here. We have already bought it. So all these things, since they have already incurred a cost on it, we don't need to let's say add it as part of our relevant cost when we are making a decision. So if anybody wants to come to our teaching center for, let's say, choosing on a particular subject or a course, then we need to consider that the cash flow that is coming, but we shouldn't consider any of the costs that we have already incurred on our board, or maybe the laptops and stuff. These things will become a sunk cost that we have already incurred. So we have to know all these things as well. So apart from that, we have to also know some characteristics of relevant cost. So you should put in mind that when you talk about some characteristics of relevant cost, we are saying that relevant costs are future costs. Relevant costs are future costs. So it's one of the characteristics of a relevant cost. Relevant costs are future costs. Relevant costs are cash flow. So relevant costs are cash flows. Relevant costs are also incremental costs. So all these things form part of the characteristics of what a relevant cost. Like I said, you can't be thinking about the historical maybe cost that you have already incurred as part of what a relevant cost. For you to determine your relevant cost, you should be make sure that you are considering what that any additional cost you are about to what incur. So that's the incremental cost. So one may ask, what is meant by incremental cost? So incremental cost is an additional cost we are going to incur as a result of what making a certain what decision. So because we are making a decision on something, the additional cost that it will come in will be the incremental what cost. Then we also have a specific overhead. So specific overhead also in terms of electricity and maintenance, all these things form part of what relevant cost. We also have opportunity cost. So opportunity cost also is what a relevant cost. So we have a variable cost. All these things are examples of what that of what a relevant cost. So we have to know all these things. And because you see, when it comes to opportunity cost comes in whereby maybe you are making a decision on, let's say, embark on a project whilst you are leaving the other. So the cost that you are going to, let's say, lost revenue that you are going to not what incur, or you are not going to, let's say, receive, that one will be, let's say, an opportunity cost. So apart from that, these are some of the characteristics and examples of what relevant costs. You also have some costs that we can say it is what irrelevant cost. That one, when you see, you can't classify it as what a relevant cost when you are in operation. So some of the costs that we can classify as what relevant cost are sunk cost or historical cost. So costs that you have already incurred, you can't include as part of what your cost that you are, let's say, when you are preparing your relevant cost card. So that's it. And also we have also committed costs that you have already committed it. Costs you have already committed it. So you can't what also add as part of your relevant cost. You also have non-cash flows like depreciation and amortization. All these things form part of what non-relevant cost. And also we have general overhead. Don't forget that general overhead is what an example of non-relevant cost, but specific overhead form part of what a relevant cost. So these are things that we should know when it comes to relevant costs. We should know the main or relevant costs. We should know the characteristics. We know some of the examples of relevant costs, and also some items that we can determine as what non-relevant what cost. So these are some of the aspects. So apart from these things, you getting to know all these ones, right? Therefore, we can proceed on to know how that we can determine what a relevant cost when it comes to material. So I'll walk you through some processes that you have to know if that you are determining a relevant cost of what the material. So let's start with this. By when it will come by with what some questions. So let me start. So determination of relevant cost. So we will start with material. Material cost. So we want to determine the relevant cost of what a material. So first, what that we need to do is that we need to ask ourselves the first question. So question that we need to ask. So question one is that we need to ask, is the material in stock? Is the material in stock? That's the first question we need to ask ourselves. And the moment we ask it, two answers will come in. Whether yes or no. So if we say, is the material in stock? Because if somebody has given you an order, so you want to know whether the material you have, you can use it to do that order. So you ask yourself, is the material in stock? So when you say yes, the material is in stock, therefore you ask yourself another question. But when you say no, the material is not in stock, therefore what you need to do is that you need to go and buy the material. So the relevant cost will be what? The purchase price or the buying price of that material. So the relevant cost. So when you say no, relevant cost will be relevant cost purchase price. So if you say the material is not, if you say the material is not in stock, therefore you need to go to the market and buy it. So that one will be the relevant cost of it will be the purchase price or the buying price. So because you need to go and buy it. But when you say yes, the material is in stock, therefore you need to ask yourself a question. You need to ask yourself another question. When you say yes, there is material in stock, the second question will come in. Then the second question you ask yourself is that, is it in constant use? Because you are saying yes, the material is in stock. Then you ask yourself another question. Is it in constant use? So you are saying yes, then you ask yourself, is it in constant use? So that's the question you ask yourself. So if it is not in constant use, therefore maybe the relevant cost will not be any much. But if this material that you are going to use is in constant, therefore you need to check because you need to go and replace it. So if you say yes, so here if you ask this question, is it in constant use? It will come up with yes or no answer. So if you say it is not in constant use, then you ask yourself, is this something that maybe is there any alternative use? That's a question that you ask yourself. But let's first read the yes. Is it in constant use? Yes. If it is in constant use, therefore, if we use this for this order, we need to go and what? Buy it again. So the relevant cost will be what? The replacement cost. So here the relevant cost, when you say yes, the relevant cost will be replacement cost. But when you say no, it is not in constant use. This means that when you use it for this order cry, it won't have any impact like that. So what you do is that you need to ask yourself another question. The moment you say no, you need to ask yourself another question. You ask yourself like, is there an alternative use? Because you are saying no. Is there an alternative use? That will be another question you ask. When you say no, the material is not in what? In constant use. So the third question will be, is there an alternative use? Is there an alternative use? That's the question you ask yourself. So you ask yourself, is there an alternative use? If you ask yourself this question, the answers that will come up will be yes or no as well. So you come up with yes and you come up with no. So yes or no. If you say yes, there is what? An alternative, therefore the relevant cost will be an opportunity cost. Because if you use this for this order, we need to go and what? Buy another one to come in. We need to, let's say, if there is another order that's coming up, you are not going to get that revenue. So if you ask yourself, is there an alternative use? And you say yes, there is an alternative, therefore the relevant cost will be the opportunity cost. So here, the relevant cost of saying yes will be a opportunity cost. Is opportunity cost. So when you say yes, the material, there is an alternative use for it. Therefore, if you use it for this particular order that you have gotten, therefore the relevant cost will be the opportunity cost. But when you say no, if you say no, then the relevant cost will be 0. If you say no, there is not an alternative use. Which means that when you use it, that's all. So when the moment you say no, then the relevant cost will be 0. So relevant cost is 0. But sometimes too, you see some materials, it can be in the stock, but it will take some time before you can even use it. And sometimes, if you can't use it for anything, so the only option that you have is to go and dispose it. So in the other way around, if you want to know the relevant cost for not the, let's say the material not maybe in the, let's say any alternative use, therefore the relevant cost will be what? The disposal cost. So in some cases, the relevant cost, the moment you say no, it will be disposal cost, because you need to incur some cost before you can what? You can even what? Dispose it. So the relevant cost can also be, the relevant cost will be disposal cost. Assuming there is a chemical that when you don't use it for a particular, let's say a particular product, you can't use it for anything, and even it has expired, so you can't use it for anything, and before you can dispose it off, you need to what? Also incur some cost. So in a case where the material is not, maybe there is no alternative use for it, therefore the relevant cost can be zero, or if you need to what? Incur some cost before you can even throw it away, therefore the relevant cost become what? The disposal cost. So you need to incur some cost before you can even what? Let's say have it as let's say something that you can use or you can dispose it of. So you need to incur some cost on it. So here, these are the ways that we can what? If you want to determine the relevant cost of material, the first question you need to ask yourself is the material in constant, is the material in stock? Because you have received an order. So you need to ask yourself one question. The material that we have, is the material in stock? Then two answers will come in. Okay, so for you to determine the relevant cost of material, you need to ask yourself some questions. So the first questions you need to ask yourself is the material in stock? So if the material is in stock, therefore, yeah, the answers that will come in mind is yes or no. So if let's say the material coming to use to do the production is not in stock, then you need to go and buy it. So you go to the market, and the relevant cost of it will be the purchase price. But the moment you say yes, some of the material is available, therefore you need to ask yourself a question: is it in constant use? The material you are coming to use to do the production, is it something that we normally use it? Then that one too, it will come up with some answers. So yes or no answer will come in. So the moment you say, let's say you say yes, it means that if you use that material for this particular project, therefore you need to go and replace it. So the relevant cost of it will be the replacement cost. But the moment you say no, then you ask yourself another question: is there an alternative use? So if there is an alternative use, if you are saying yes, there is an alternative use, therefore if you use it for this particular project, you need to you are going to lose some revenue. So that one is we term it as opportunity cost. Because you are going to use the material for this particular project, and let's say you are forgoing the other, therefore the relevant cost is going to be the opportunity cost. But if you say no, then the relevant cost is going to be zero, because there's no an alternative use for it. Or sometimes you need to incur some cost before you can dispose it. So if there is an issue whereby you have to dispose it you have to incur some cost, then that one will be the relevant cost will be the disposal cost. So ladies and gentlemen, this is that if you want to determine the relevant cost for material. So let's go to how to determine the relevant cost when it comes to labor. So let's go to labor cost. Okay, so for you to also determine the relevant cost of labor, you need to ask yourself questions. So the first question you ask yourself is, are employees permanently employed? The employees that you are working with them, are they permanently employed? That's the first question you ask yourself. So the first question, are the employees permanently employed? So when you ask yourself this question, there is two answers that will come up: yes or no. So yes and no. If the employees are not, if you say, let's say the employees are permanently employed, therefore you need to make sure that you pay them their any overtime that they will do, and any hourly rate. So you pay them, the relevant cost of it will be the hourly rate plus any overtime premium that they will do. So the moment we say yes, the relevant cost. So relevant cost. The hourly rate plus overtime. But the moment you say, oh, the employees are not permanently employed, therefore, if that's the case, then you need to ask yourself another question. So you need to ask yourself another question, because let's say, are the employees permanently employed? If, let's say, you are saying no, okay. If you are saying no, so let me bring this one here. If you say no, they are not permanently employed, therefore you need to go and what? You need to pay them so that they will go. You give them their relevant cost to be the hourly rate plus the overtime. But when you say yes, then you ask yourself another question. So another question you ask yourself is, question 2, is that, is there any overtime? Is there, let's say, any spare time or any spare capacity? So you ask yourself another question, which is there a spare capacity? Because you are saying the workers, you have employed them. So what the hours that they are using to work, is there any spare capacity that they can use to do that what? A one-time project or a request that you have gotten from your, let's say, a customer. So you ask yourself this question. The moment you ask yourself this question, what that comes in mind is also what? Yes or no. Yes or no comes up. So if you say yes, there is what? If you say yes, there is spare capacity. It means that there is a lot of hours already there that they can use that hours to go and do the other job. So because of that, the relevant cost will be 0. The relevant cost will be 0. If you say yes, then the relevant cost will be 0. So if you say yes, relevant cost will be 0. But the moment that you say no, then you ask yourself another question, which is overtime what possible? Because you are saying there is no spare capacity. So you ask yourself another question. That one will be the question 3. So you ask yourself another question. And that question is overtime possible? So you ask yourself this question. So the moment you ask yourself this question, yes or no answer will comes up again. So you bring yes or no. Yes or no. So the moment you say yes, overtime is what possible. Therefore, you need to think about you paying them the relevant cost will be the hourly rate that they are going to spend. Maybe the hourly rate, you pay them that, then you also pay them the overtime premium that they are going to do. So the relevant cost will be the hourly rate plus the overtime premium. So when you say overtime is possible, therefore you need to, the relevant cost is going to be the hourly rate plus overtime. Okay, so then the moment you say no, then here it will come with another issue. If you say no, there is, let's say overtime is not possible, then what that you need to bring up is that you need to think about it, whether maybe you need to outsource it. You need to outsource it. So you need to outsource it. So the first option when it comes to the no is you need to outsource. You need to outsource the work. Or let's say you move some employees from other departments to come and work on that particular project. Or movement of employees. So when it happens like, when somebody will ask, what is meant by outsourcing? Outsourcing is, let's say, because that you don't have, let's say, number of hours, maybe the hours that you have is limited, then maybe your workers cannot move in to go and do the job. Or sometimes you want to, let's say, utilize your resources for the orders that you have received from your customers. So because that you don't want to, let's say, have an issue with you using your resources, that you have to use it to do the orders that you have received. So what you have to do is you need to outsource it to another company to do it. A company that, if you like them to, they can provide what? high quality, maybe the same way that you can do your production. So that one is the outsourcing. Then the movement of employees. Since that there is no overtime, therefore it can be like you need to let's say move some employees from different departments to come and work on that particular project. And when it comes to that one too is another issue. But the issue here is that anytime it comes like the organization is not having any overtime, if there is overtime is not possible, then you have to make sure that whether we outsource it or we are moving some employees to come and do the job. So the cost we will incur, in outsourcing, and the cost we incur when it comes to the movement of employees. This is the difference between these two. The lower of the cost will be the one that will pick. So we need to make sure that anytime there is an issue of, let's say, moving an employees to come and work on this one. You know, one thing also is that the moment you move an employees from a particular job to come and work on the new job, you are going to lose some revenue. That one, this one, the relevant cost here will be opportunity cost when it comes to the movement of employees. Then you compare the movement with the outsourcing. Then you pick the one which will give you the lower cost. So this one gives us all the, if that you want to know the relevant cost of labor, you ask yourself a question: are the employees permanently employed? The moment you say no, they are not permanently employed, therefore you need to the relevant cost will be the hourly rate plus any overtime premium that you give to them as as their salary or something. Then that's what you give to them. But then when you say yes, they are not, let's say they are permanently employed, they are your workers, then you ask yourself another question: is there a spare capacity? A spare capacity means is there any idle time? Is there any idle time? So that's it for that. Then you move on with the other aspect as well. Okay, so when you ask yourself with this question, if there is any, if you ask yourself with the, if there is any spare capacity, then you answer it by using the yes or no. And when you say yes, then when the relevant cost will be that of 0. The issue here is that you have more hours. Therefore, if you are moving some of the workers to go and use some of the hours. Let's assume the worker is supposed to work for, let's say, 500 hours, but they are just using, let's say, 350 hours on the normal job that they do every day. So if let's say there is a request from a customer, then that project that you are going to do for the customer, it just needs something like, let's say, 100 hours. And in your total hours, you are supposed to have 500 hours, and you are using 350. So you're left with 150. So it means that you can spend that of the other 150 hours on that new project that you have, let's say, received from the customer. So that's why we are saying that the relevant cost will be going to be 0 if there is a spare capacity. But if there is no spare capacity, therefore you need to ask yourself another question: is overtime possible? Is it that we need to, let's say, can we do overtime? So that one too will come up with some other questions. So you bringing up with your other question here, whereby you ask yourself, if it's yes, then you have to get to know that relevant cost will be the hourly rate, because you are going to make them do overtime. So that one will be the hourly rate plus any overtime that you do. Then also, if you get to know that overtime is not possible, then you need to think about these things. You have to outsource the work, or you have to move some employees from the current job that you are doing to come and do the new one. And moving the employees will lead you to opportunity cost, because they are not going to, you are going to lose revenue from where that they were working. So that one will be the movement. But the outsourcing also, you have to also think about it, because when you outsource your work, because maybe somebody trusts you and the person has given you a job for you to do for the person. So when you are doing it, you have to make sure that, let's say you are outsourcing it, you need to check the quality that they maybe the person you are outsourcing the job to will also provide. And also you check let's say, the time availability, because maybe the person might need the job to be done just some few time. But if that you are using it, let's say you are outsourcing it and the outsourcer will not produce it or do it for you within time, that one too will be another issue for you. And also you check your reputation, because sometimes when you give the job to somebody, the person will not order do it proper. So that one will also be an issue for you. So these are the issues that it will come up when they say no, there's no overtime, it's not possible. But the other part of it is that when it comes to this issue, you need to make sure that you are comparing the cost you incur in outsourcing and also the cost in when it comes to the movement of the employees. The lower of the lower of these two will be the one that you have to pick as your relevant what cost. So ladies and gentlemen, this one ends with the how to determine the relevant cost of a material and also labor. So this will I'm going to give you another content on a question on relevant cost, so that you understand what I'm trying to, let's say, put on board, so that you'll be okay with how that thing is going to be. Yeah. So thank you and stay tuned. You're going to have let's say an exclusive question about how relevant cost questions is going to be done. Thank you.